Hello everyone, very good morning. We have a gap up opening and the C premiums are clearly boosted and the market has come down slightly. So is it going to hold or is it going to come down further? We will have a look at it and see. We are not going to do anything for another 5 minutes because this candle is the first 15 minutes candle. It is all within and market has not decided where to go. So most likely it will attempt to fill the gap. That's one opportunity. But having that said, we will also see whether it is making an effort to clear because quite a few Wednesdays it started trending recently. So we got to be very careful. Just a moment. Okay, so again within the first 15 minutes candle, we got to do nothing. Hi, Divya. Very good morning. Carried shots and then booked loss. Okay. Um, sure, Divya. I think it's fine since tomorrow is expiry. Also, not tomorrow. In a couple of days, there are chances for the premiums to erode. So when you say you're carrying shorts, you mean the put positions? Because shorts means selling of options. Oh, hi, Santoshi. Very good morning. So, Santoshi, happy to see you on stream. Uh, this opening trade is very critical. Once we get it right and then make some money, then it will act as a good buffer. So it's important that we wait for the right opportunities. Hi, Arun. Very good morning. Hi, WAP 12345. We got to wait and see where the market is heading. Until we have confirmations, we got to take no trades. Okay. Oh, you carried puts. Sure. Thanks a lot, Santoshi. See, I would be more happy to take a call position around this 20 EMA, around these levels. Like 538 is a good place for me to enter into the call side. Here also I can enter, but then it's like taking 50 percentage chance, right? Uh, Hi Nihas, very good morning. Happy Onam to one and all. Yes, today is Onam. Happy Onam to one and all. Let's see how good the day is for us. Yeah, that's the kind of entry we wanted. Uh, Maybe I will try entering into some small puts quantity over here. So I entered into small quantities of puts over here. Sorry, calls over here. Very sorry, calls I have entered. I'm taking that little extra risk because there is momentum on the upside, and then as it was reaching to break this day's low, they'll attempt to pull it back up. That's the reason why I entered into the call side. This is a risk that I am willing to take. So yeah, clearly it is paying off well, and I'm exiting this position. Yes, booked some decent profits for the morning trade. Hi Vinod, very good morning. Has anyone else entered into the call side? Or you guys were waiting? Hi Avinash, very good morning. That was a quick scalp because the price is back to where it was. Again, this time I'm going to re-enter at a very cheaper price again. Sure. What will be the trend today? So PE or sideways? So see, days like this, where we have clearly established a momentum on the upside, market would like to continue on the upside. Only thing is that we got to wait for the right opportunities to have a dip and then get the prices premium cheaper so that you can play directional. I am having a thing of call side view. That's purely because market had tested and tried enough to break this zone, and then clearly it see a couple of times it got tested in the past at this particular zone, and then after a while it bounced back and sustained above. Then later when it came back and then tested it, it had some 1 hour of consolidation and bounced back. Then here again it consolidated. There was a huge debate whether 44,300 will be the decision point for both calls and puts, whether people would like to take the market higher or downside. So 44,300 for me was a very critical zone, and that was cleared yesterday and sustained above, showing that yes, we are bullish. Now it has given a gap up. Obviously, the CE premiums will be slightly boosted up. You don't want to buy it at a boosted price. You want it at a discounted price. So maybe you got to wait and then see if there is any sort of quick dip. You can get the premiums cheaper, and that's the side I would like to play. As long as 44 500 is holding up, there is no problem. We always have the bullishness in place. And still 44K, I would say it is bullish because bulls have fought all their way up. So not easy for the bears to take the market down. Having said that, just for getting the premiums down, no, at a cheaper price, they may attempt to get it, bring the market down, and then do that. And remember, this is the first candle. This first candle's low has not yet been broken. That's one reason why I am already jumping into the calls. Although I wouldn't be doing this, but still I do it today because I know this first 15 minutes candle's low is not yet broken, and which gives me some sort of leverage to play and try. And first attempt it will take at 9 EMA, some support it will take. So taking that chance. That's it. Most welcome, Avinash. It's a pleasure. So And remember, if you're playing in current week expiry, play in ITM strikes like 44 500, 44 400, like that. The premiums will be cheaper, but you will be getting your money faster. If you are taking at the money strikes, it will not appreciate much. So always play like two levels down ITMs to get the returns faster. Now this candle has clearly broken the first candle's low. The OI data is saying that there is short covering on the call side. So people are, adding more positions to buy calls. Okay, I exited again with some profits. Very small, profits. You keep booking for 10 rupees, 12 rupees. You keep booking that. You have an edge. So when there is uh, any sort of pattern confirmation. Now, why did I kind of book it? Because it has broken the day's low. Although short covering rally it is saying it's a mixed opinion, right? Like as per the pattern, it's broken the first 15 minutes candles low. But as per the OI data, it is saying that there is short covering on the call side. Now I don't know whether it will which side it will respect, because one side it's broken on the downside, another side data is saying it's going to go up. So when I see a profit, I book that, and then once we get more confirmation, we can re-enter. So not going to miss much. Oh, Santoshji, you entered call side, is it? Which strike and at what price? So data won finally. It's going up. That's some good move. The way that call premiums are appreciating is insane because the strike that I'm looking at is 44,500. It was at 233 around here, and now itself it has crossed 232, right? When the small move happened, meaning it's not depreciating at all. It's like having a great momentum. While the puts are not appreciating much when there is a downside. Wow, that's insane move. So it's a huge spike, and then it came down. Um, should we re-enter? Maybe I will re-enter. Santoji, have you booked or you're still holding up? I think the way that the premiums are holding up is very scary in the call side. It's too strong. So it has broken on the downside now. Maybe it's going to fill this gap and then bounce back. But maybe it won't be directly going down. Some sort of pull and slow and steady filling of gap can happen, can be expected. Let's see. Mhm. So these are some ways to get the premiums cheaper. This is what I was saying. They would like to go up, but then they will like to also make the premiums of calls cheaper, then take it higher. So the premiums have been like fairly like brought down significantly. I'm sure a lot of people would have accumulated at this juncture. Okay, September contract, Santosh has re-entered. Yeah, that's pretty good idea to accumulate the month-end contracts. Mhm. It tested and broken this 20 EMA as well. Or we got to wait and see for the next 1 minute, because is it really broken or is it going to like reverse from here? Again, there is a charting delay of about 3 seconds at least. So, I see that there is a delay in the chart and the price movements. Mm, After the price move happens, then the graph is moving. That too after some 2 3 seconds later. Kind of tiring it is to see such things. But yeah, what best we can do. There is a short build up on the call side, but I feel that no calls should hold up because the way that premiums are holding up in C is very insane. But call put side is depreciating much faster. Whether it is going in the same direction or against the trend, the values are just not moving much in the put side. Of course, yeah, Divya, there is more delay. Correct. I am also seeing that there is a significant delay in the price and chart moves. Let me give you one example. After the moves, I'll tell you. The only time that the chart and the prices are in sync is when it is consolidating like this. This is the only time I see that they are synchronized. Otherwise, after the move, chart gets updated. Let's see. Anyway, I feel that it has come down only to take a support around 9 EMA and 20 EMA, kind of holding up. It's a good sign, but too early to comment. Maybe just 1 hour into the trade, we will wait for more clarity. Uh, is it going to test the pivot? Has it closed the gap yet? Not yet. Right? The yesterday's close was around here, so we still have that gap to be filled. See, the graph is going up, but the price is just going down on the call side. So after a couple of seconds, it will be like coming down. You see, that's the delay I'm talking about. See, the prices are actually not very clear. Maybe can someone confirm, Santoshi, how is the prices reflecting on month-end contracts? Is it weekly contracts that's having some issues or month-end contracts also? I wanted to know. So if anybody is playing in the month-end contract, can you confirm if the prices are reflecting correctly? Someone is hitting on that C very hard. See, this price reflections are so pathetic here. I feel so helpless. Anyway, I feel it should pull back in due time. There is an evident delay. Because it has gone down and now we will see the fall happening. You see, this is why I was saying that it is not reflecting correctly. See, after the move has happened, after the price moves have happened, it's like reflecting here, kind of really uh, sad. It has filled the gap. True. If we just look at the chart, then we will miss the moves completely. Like the price had already moved, and then it's showing after some 2 3 seconds of delay. It's kind of very disturbing to say that. Mm, okay, I just will get some water and be back. There is. Oh, this is going down, is it? Just- It is going to go down further. Just let me confirm. Then go. Ah, no, I don't think so. It will hold up. So, just another 5 10 minutes. I should be back. So I'm back. So it shows there is a short covering rally on the call side. But having fallen this and then fill the gap, yes, very likely that it can go up again. Uh, got to see whether it has the momentum to clear this 20 MA. If it clears, then we can expect it to go all the way back up. So kind of a wait and watch game now. Because a lot of people would have exited their calls around the bottom, thinking it will go further low. But it's kind of ways to eliminate the small players from holding the calls. Maybe it's holding up and then try to clear this 9 EMA and 20 EMA. Once that happens, then it should test VWAP. So So once it clears those 540 levels, then we can have a significant recovery. But if it doesn't, and then it makes a newer low, then got to be very cautious because market may go down. So now, if you see this large green candle, it has taken a resistance at 9 EMA, right? So is it going to attempt to break this and touch 20 EMA, or is it going to go down? That's the basic question. So you got to wait and see. This is good sign because it has made a large red, and then from there it turned into green, and then trading close to this 9 EMA. Maybe it will make one more attempt to clear that, and once that happens, then next attempt would be to clear 20 EMA. And once that happens, then we should see it trying to pull off comfortably on the upside. Uh, got to see how this next 10 minutes plays out. This 44,500 call option made a high of around 260 rupees, and then currently it is trading at 177. Um, Such a dramatic no uh, premium wiped off in the call side. There is always a good possibility for people to focus on strikes like this, because usually looking at this sort of pattern, everybody think that okay, now it's time for food, but then they could play a reverse game and trap the retailers even more. So um, we need more confirmation on things. At this juncture, it is anybody's game. It can go up or down. Both the possibilities do exist. Because all that we were concerned was there was a gap in the morning, and that gap got filled. Now it's purely directions that they have to take. So which is going to be a fight between the bulls and the bears. So let's see. So definitely, it was first time it tested this, and then second time it broke. Now it's going for this 20 EMA. 20 EMA, once that's taken out, you can expect some sort of nice recovery. Yeah, it has cleared. It has cleared 9 EMA, sorry, 20 EMA. So we got, yeah, it's cleared. Now we will see it playing on the upside, because it's going to test VWAP now. So again, this one turned green, which is another good sign. So let's see. So now the data says that there is a long build-up on both calls and puts. Both sides, there is a long build-up. So the premiums are just disappearing at smaller moves. Both the sides it's disappearing. Relatively, the regain is much better on the call side, but put side, smallest of moves, it's depreciating faster. So this is a retracement. Let's find out. Yeah, it got rejected at 0.38. So looks like this is a retracement move. Still, it's in the bearish control. Hello, Rajesh. Very good morning. Welcome to the stream. Chart looks like PE. Yeah, chart. It looks like it's going on the downside. But it was only a gap filling. We got to have more confirmations. Unless it breaks this low, it's not yet confirmed that we are clearly on the downside. There was a gap up opening, and then it tried to fill the gap, and then it's making a retracement move and getting rejected at Fibonacci levels of 38 percentage and coming down. So looks like it's bearish, but until we have a confirmation of clearing this low, um, it's still half chance for both the sides. Yeah, maybe it's coming down. Yes, like Divya says that it's making an attempt to break or whatever. Um, but if they don't do it fast, then there is every chance that the bulls will pull it up. And it's comfortably trading above 44,500 level. So 44,500 is not yet clearly broken. Once this candle it came and then it broke here, the subsequent candle it's just jumped up. So it's holding up 44,500. That's a great sign. The question is like how much more time would it need to make the decision? Because the more time it consolidates, both the puts and the calls are going to get eroded. That is even far worse. Bulls will buy at day's low. Yeah, absolutely. They would have already accumulated some portions over here. Guys, I have to pick this call. It's very important call from my auditor. Just a moment. Hello. Hello. Yes, sir. All right, I'm back. Let's see. It has tested VWAP as well. Now, was it zero point 0.5 in Feb is what we need to check. Yes, it was zero point 0.5, exactly zero point 0.5. So, still it's open. Mhm. I feel that it might, consolidate in this range for some time and give a breakout. Uh, Probably they will also see which side is, holding more positions and then break out the contrary side so that they can max out. Right now, if you ask me, then uh, it's this looks like a good call to close the gap, and it has retraced back all the way up and took a resistance at no VWAP, and this is also exactly zero point 0.5 of Fibonacci retracement. So clearly, it's pattern wise, it's on the downside. Position data wise, it's still unwinding on both the sides. They are unclear which side to take it at this juncture. Uh, but looking at the puts and the way that it is, eroding, it doesn't look that lucrative. One of the strikes that I was watching is 44,400 put. It went up all the way to 150 and then now back to 127. Right? The 44,500 call, which was at 220, has gone to 159, but it has come back to 185. So look at the kind of gain that has happened from here to here, but look at the decay that has happened on the put side for this. It has not appreciated for the kind of fall that it had. It didn't appreciate much. So, which means to say that there is a lot of potential yet on the call side. So we cannot write off. We got to still wait and see how things turn out. Now I see that the CE premiums have jumped suddenly to 192. I said 185 it is. It has gone to 192 already. Which is there again to say that how much of potential is there on the call side. So all it needs is a small trigger on the upside, and then the premiums are jumping on the call side. And right now, I said it is at 127, and it has come down to 120. So it became 120 in no time. And data also shows that there is a short covering formed on the call side. So Rajiv is asking what indicator I am using. I am using 9 EMA, 20 EMA, and 200 EMA. These three are pretty standard in my trade setup. Apart from that, I use volume, VWAP, and then my own fast levels. So fast levels is these UT2, UT3 that I keep posting on a daily basis. So these are the indicators that I refer to for intraday positions. There is short covering formed on the put side now. Again, the premiums of calls are like depreciating. Mhm. So it might come and retest this again, and then if it bounces back, then it forms like double bottom. So that's a good sign for holding up. But then if it breaks this low and then forms a new low, then that's not a good sign, and market may continue to go down. So very important time for the market to decide the direction. Um, Hardly another 27 and 45 points to decide the direction. Somebody at the doors, let me check and come back. Uh, so still indecisive which side the market wants to go. The data continuously changes between long build up, short build up, long unwinding, short covering. So pretty unclear. Mhm. Looks like it's forming ascending lows. You see this? It's like maybe we can change the color a bit. Let's see if it takes the support over here, then you know how good is this no trend line. Now I see that the put values are holding up surprisingly. The call values are eroding. Again, it's bouncing off. I think this is a good trend line. Uh, so we can track how this trend line responds through the day after a couple of candles. Let's see. This can be a good leading additional decision factor. What's the scenario right now? See, right now it is at a, uh, you know, both the sides have equal probabilities because 44 500 would be the first level of support, and it appears that there was a gap up, right? This gap was filled, which is the basic thing that you can expect. Once the gap is filled, we got to see whether the market has the momentum to go further down. And what is the further down? It should break the day's low. Today, the low was formed over here, this yellow line. We got to wait and see whether it has the momentum to break this. But unfortunately, it didn't have that momentum. It got retraced and then pierced through this 9 EMA, 20 EMA, went and then took a resistance at VWAP and came down all the way. Right now, it is trading near those retracements levels, which is what I will draw and show you again. You see this? This is the retracement levels. It has taken reversal at zero point 0.5. So it came down, right? And once it touched, it came down. And then I see that there is an increasing low, a new trend being formed. Um, so as long as this one guides and then it takes support and goes up, I expect some sort of strong reversals in the second half. It can continue to go up. But if it breaks this down, then there are two tasks. One, it has to break this day's low. Once the day's low is broken, then every half an hour, if it makes continuously newer lows, then we can expect it to go to the levels of first. Then it will have to break the pivot, and then I'm expecting it to test 32, and then the zones around 44 300 is what I am looking for. So we got to wait and see how the market plays out. Until then, we got to wait for the confirmations. The confirmation is that for upside, what is the confirmation? It has to clear this VWAP and then trade above. Once it breaks this VWAP, then the momentum shifts significantly because it will attempt to clear 600. Once it clears 600, then it will make another attempt to clear 650. So every 50 points, and once it crosses 700, then trend is absolutely clear. For the day, it should continue to rally as much as it can. That's the game plan. So I hope I answered your question, Mudit Rajput. Also keep track of the strikes on both call and put, preferably some sort of ATM strikes or ITM strikes. See what is the price change happening, how the prices are reacting in both calls and puts. Uh, from my observation, I feel that calls are doing much better than the puts. Although there is a jump on the put side, but then it quickly disappeared. Um, and the way at the speed at which puts are reclaiming the values are dramatic. It's just jumping like 5 rupees, 6 rupees. Whether it is upside move, downside move, it is sensitive. The price sensitivity is very high on the call side, but the put side is for erosion it is faster, but for gain it is pretty slow. So it is eroding faster, but it's not claiming back. When there is a down move, it's not coming back faster. So that is something to be noted. Maybe if you can correct me if my observation is wrong. SG, some top floor, they are just breaking the wall. I don't know why. Every day they are doing this. For last 10 days, it's going on like this. Pretty disturbing it is. I thought it wouldn't be heard in the stream, but I'm sorry that it is. Yeah. Is it too noisy? Not as much as I'm hearing it live. Thank you. At least it is. Yeah, it's too much. It's like somebody is knocking the head. It's pretty bad over here. But this condenser mic, I don't think it will capture so much, but still you could hear, I am sure. Uh, Divya says that market is so slow with the sole purpose of eroding premiums. Right, Divya. In fact, they are taking this 44 500 straddle erosion, I believe. That's what is happening because when it went here, the puts value would have been butchered. Now they are butchering the calls. Uh, Maybe even 44 600. Who knows? Could be that. Again, there is short covering. As per the data, it's showing short covering on both the sides. I don't know how that is possible, but yeah. As far as this trend line is not broken, and then the C premiums are not eroding, and then you see that the call premiums are, I mean, yeah, call premiums are not eroding, and then put premiums are not appreciating much. To me, it looks there is a lot of moves left on the upside, but it's only an interpretation. I can be wrong. Just looking at all of this, I am just making that assessment. But so far, it holds good. You can see that there is a sharp bounce that has happened. On the CE premiums are jumping like anything. You can see that it has. I don't know which strikes you're looking at. From 190, it has jumped to 202, and still holding up at 200 now. 199, 200. I'm talking about 44, 500 calls. Uh, I sense a strong potential is still left on the upside. But I think I'm almost like 90% sure that it's going to go up. Reason is data is completely bullish now. It's changed completely bullish now, and the way that it is, breaking VWAP, and see when it touched the VWAP for the first time, you see it never came to that point again. But look at the speed at which it went to the VWAP. That's called the momentum, right? It has that momentum to pierce and create new highs. So I feel that there is a great upside moves left. Let's see how it works. It cleared Viva. You see, the scandal is trading above clearly. Uh, See what is happening with this fall. The call premiums are losing, but the put premiums are not increasing. Right? Just observe that. It is all. It is to say that okay, this is only to chase away the retailers from holding the calls. Nothing much. See, if there is any proportionate increase in puts, at least considerable increase in puts, then it makes sense. But nothing is happening. In fact, the puts are going down further. So I feel it's not chasing of the weekends and taking it further higher. I can't really sit in this room because of the noise. It's so loud. Uh, so there is a 1 rupee increase in the put and 10 rupee got wiped off in the call, but calls are still bouncing back because the sensitivity is very high. It's able to bounce back pretty fast. Like I said, the 44,500 call it went to 159 and currently it went to 205 and trading at 195. But the puts, which was at 100 rupees, went to 150 and again it is trading at 110. Right? So that this is the play that you got to watch how the premiums are playing around. So okay, was it 60 percentage? Yeah, that's another important question. We might also have to check this because yeah, it just cleared 0.5, but it did not even test no 61 percentage yet. Okay. Yeah, it has taken support at VWAP. That's correct, Santoshi. I would love to come there. Only thing is that I'm streaming from the system, and laptop, I don't think it will be that effective to manage the screens. That's the only thing, Santoshi. But we can catch up for a tea if you're free. Because I also need to get out of this house to get this sound away from my mind. It's like they start exactly around 8:30 in the morning, and then it goes on till evening 5 o'clock, 5:30. Oh, quite there for about a week or so, maybe a week or 10 days. We're doing this. Sure. Okay. I think I will also need a break. So I'm starting right away, and I'm going to meet Santoshi, have some tea, and then come back. So yeah, catch you guys in another 15-20 minutes. All right. I'll be back soon. Uh, so I'm back. Let's extend these lines since it played out. So is it going to go further high? Looks like that because all the it's playing by the trend line over here, and consecutively it's going higher and higher. Also, it's holding up the value, so that's a good sign. Just now I checked the OI data. Let me refresh it once. It's long build up on both the sides. Mhm. Let's check. Holding at 575 ranges. Pretty good. Yeah, pretty much, sideways, like Sudesh pointed out. That's right. A lot of sideways moves are happening. Mainly, what causes this sideways market? Can someone explain in the chat what causes the sideways market? What are the factors? Sellers domination, right? That's true. Seller is dominating. Any other factor. Fight between bulls and bears. True. When you are in a consolidation zone, yes, there is a fight. Indecision, don't know where the market wants to go. That's right, Santoshji. At the tipping point where it can become a bull market or a bear market, that's where the fight happens intense. So you see, this is one zone that has to be fought. Usually, I would say this is the very big fighting zone, but this is again another level of fight. Bulls have an upper hand here, but bears are trying to put their fight to drag it to the first levels of at least 44,300. Hi Aruna, welcome to the stream. Yes, indecisiveness, unable to decide. That's true. One other major contributor is there. Can someone something that changed recently? Until we see some sort of directions, let's use it for learning purpose at least. Let's learn something. FII is selling more and booking profits. Sudesh, yeah, selling, yeah, right. Any news or event related? Uh, See, if there is news or events, then it should actually take directions. There are no news also. We have seen all the moves happening only when there is news. Say, for some big companies are publishing their financial results, or Chandrayaan launch was there. The success of it plays a critical role. So, such factors, yes, I agree. But why it should consolidate? Two significant reasons still left. Yes, all the other things are good. This that applies to any market. Like seller domination is good. Fight between bulls and bears. Yes, I agree. But there are two more factors that we are missing out here. A breakout in any direction. Yeah, that's what the fight is about, right? Bulls and bears are fighting for some sort of breakout, and accumulation happens. Writings, directional writings also happen. So all these are good. Is it good to go for call option? Uh, yes, as long as it's within this trend line, we can get it on the dips. Definitely, it's a good idea to enter in, but we should enter into ITM strikes, not the at the money strikes. It's not going to pay off well. We're going for at the money. We shouldn't be missing out on these two factors, which we have been checking consistently over time. What are these two factors? Anyone? OI data, right? OI data is Fine, OI data is correct. Um, Something closely associated with OI data. One of the factors we always talk about that has been affecting the option buyers for last 8 months. Yes, Anand got it right. India VIX has been awfully low, below 14 for more than 9 months. That's true. So when the VIX factor is low, then the chances of market to consolidate within a tight spectrum and then erode the premiums is extremely high, and very difficult to trade and make some money. That's one. Second thing is that the recent changes that has happened in the market nature itself. What are the recent changes that happened? April, June, Nifty went up 62. They kept on adding new expiries. Each day we got one expiry, right? Nifty expiry, mid cap Nifty expiry. Then you have, yeah, expiries. So the nature of expiry is to erode the premiums and win. So supposedly Bank Nifty has all the strikes has to become zero and the writers have to make money. Then it has to consolidate only in that expiries itself. Only within a short range. If it trades, then you can get the money as a writer. So Monday they focus on FinNifty expiry, so they just mid cap Nifty expiry. They keep it in a tight range. Tuesday again, Wednesday again. So every day there is expiry, which means they are managing the index and not caring about the actual breakouts or what the technicalities really mean. Couple it with low VIX environment, it's super deadly. Any small 50 points move will erode the premiums so dramatically. It has no chance even to reclaim. Even on days like Monday, Tuesday, you know, Monday and Tuesday also. Maybe our expiry is on 31st, but today also there will be massive erosions on both the sides. That's all something because of the new game change. So yeah, get used to this. That's what is making the lives of buyer so tiring and difficult. Oh, it broke the trend line for the very first time. Still have about 46 seconds, so let's see if it is pulling back or it's going down. Yeah, nowadays, Sudesh, you're right. Every day has become so challenging for option buyers. Even as an option writer, it's very difficult to make money because what is the premium? You look at it. At the money strikes are trading at 200 rupees. If I do a short straddle, 200 and 150, 350 rupees only. And if there is any sort of 100-point move, the straddle gets into loss. I have to do adjustments for every 100 points, which is so taxing. In the past, you need to do adjustments for at the money strikes, maybe when it moves somewhere like around 250 points, 300 points, then only you should make adjustments. Now, every 100 points, you will go on making adjustments, right? So, only big players with extraordinary conviction goes on to write. So, it got pulled back, plays within the trend line. The trend line is still intact. We don't have to change the view.
So you can see that the call premiums are again shooting up. So it's good that nobody was making any hasty decisions entering into the put side. It's trading right into the trend line. So yeah. Yeah, stock specific moves throughout. Okay. Uh, yeah. So days like this will really make us think stock options are much better. Definitely. Yeah, I think stock options will be more reasonable. But I don't have a experience in stock options. So for me, that is ruled out. At least those people who have been doing the stock options can make some money over there. Swing trades would have given more profits in past 6 months. Absolutely. Maybe some reputed stocks like Reliance and some bigger brands we can study and then give it a try. Nothing wrong in that. Quite it requires complete attention and devotion to that. You need to study it meticulously. Look at that fall. Oh my god, look at the premiums, guys. Crazy. Crazy premium erosion. What a fall. Just a moment, somebody at the doors. Wait, wait. So it broke the trend line like in one streak. Again, what is the gain on the put side? It has come to 127. Although the calls have lost like 20 points, the puts have gained only like 12 points. They will trap people, and then they are really spoiling it for everyone. No, nobody can be comfortably taking a trade in this sort of setup. uh, I would do a quick scalp over here. It's not going down like 1 rupee, 2 rupee. It is suddenly refreshing like 20 rupees down. That is insane. What are you trying to do there is to create a panic. It's not, see, back in days, that it's going to go like 5 rupees, 6 rupees, and then slowly going down 2 rupee, 2 rupee, like that. Now, one refresh, it is suddenly you see that it is trading at from 193, 195. Suddenly, all I am seeing is 171, right? And I was prepared, so I just took some quantities, and then yes, now I exited my 100 quantities. I took it at 173, exited at 190. Now you see it is already like firing up on the going 200 rupees now back again. I mean, seriously, what are these guys doing here? Super crazy this is. Yeah, 205, it got executed. Um, of course, yeah. Not the I mean, I don't know what to even suggest anyone. Run a YouTube channel. You are there predicting and then making some analysis. But look at the way that market is moving, right? See, you see a trend break, fine, and at least continue in the same direction, right? Now the very next candle you got back all the way up, and so on what basis should you trade in this sort of situations, right? Purely algos hunting everywhere mercilessly. You put a stop loss 20 points down, 30 points down, it will be hunted. You place a stop loss, you sold something and then kept a stop loss at like 100 points up. All it takes is like one violent move and then they are hitting the stop loss, coming back to the same place. Now, if you look at this trend line and this distance, it's not much. Who knows? Within 30 seconds, it can rebound and then come back here as well. So, how do you trade, right? God. One moment. Again, someone. Grace. No. Okay, so uh, insane moves happening. Good, any which ways, this is fine. We will see. The market was trading as the 44,500 call was trading at 193, 192. It went to 168, and then it went and placed hit my one of my targets at 205, and currently trading at 191. So insane moves are happening. So if you calculate end to end in this move, in this two candles, it made about 40 points of move from 168 to 205, 35 points of move. So Santosh ji, were you able to exit your positions at 205? Oh, fabulous. 205 it executed. So I will give you one example of what's happening over here. I think the market will likely to go up, not because I'm holding a call position, I'm saying this, because it's very easy to get associated with what positions I have. I understand that part, but it's not that. I feel that this sort of break from the trend is uh, more like this. You see, it broke this level and then it consolidated for some time, and then massive rally happened that day, right? I would say that this is one such day there where no, they have formed a trend, they broke it, consolidating, and then there will be some sort of upside trend continuation. So these are only to chase of the weaker ants, is what I believe. Maybe I could be wrong, but it looks like that to me. Because having gone that far and then CE positions are back to 195, it is trading. See, here it was at 193. Here it is. Let's understand. I am holding a position of call. Here it was at 193. Market is trading here. It's trading at 192, 193. What does it mean? With this fall, the CE has gained. That's what has happened. It is still so when it comes back to here, this will be trading about 200 then. So without realizing, CE values are increasing. That's what is happening. It's already at 194, 194, 195. When I was holding here, it was at 192. Yeah, even a small writers will get butchered. It's extremely tough to get out of the trades without burning the hands, even as a writer, because these spikes will hurt. These spikes will hurt. Okay, so Santoshi says that the trend is put side as it's making lower lows. No, higher lows it's making here. You see this trend line is, say that it is making a higher lows. The lows are increasing. You see higher lows. So it's a confirmation of upside moves. But what we are seeing is that the trend line has broken. Essentially, what it means is it should go down, right? But I'm not getting the conviction that the market will go down, because it went all the way and then restored back. And while it is trading here, the put value, which was before the breakout, it around here when I was holding at 192, when it went down it became 169, and right now it is here at, again it is trading at 195 right now. It has not even come back to this level, it's already trading at 195. So put value has gained the premium with this, with these moves. The put value, sorry, call values have increased, call values have appreciated. That's what I am saying. um, so when it bases the kind of things that's happening, I am assuming that it looks like this pattern over here, where the market clearly broke, consolidated for some time, and then towards the day we had a massive upside breakout. This is what might likely happen over here, is what I'm anticipating. I could be wrong. I'm just saying it looks like this breakout looks very fake. This looks like a fake breakout, is what all I am saying. Because when you get this sort of break, the data should say that short covering on the put side, and then a lot of people are showing long build up, call unwinding should happen. None of it is happening. In fact, there is short covering on the call side, longs are unwinded, and the put premiums have decreased like super crazy. Before this fall, it was at 110. Now, with this fall and this pull, it has gone to 106. I'm talking about the strikes 44,400. So, just observe both the strikes of calls and puts and see what is happening to the premium. That will help us understand whether we should square off a position or not. So, we got to pick up some, however, smallest details available. We should try to capture that. Days like this are really difficult to play. I understand. That breakout doesn't have the volume too. Yeah, correct. So the good thing that happened is when the fall happened, I was expecting some sort of craziness like this, so I kept some sort of buy positions. The moment I saw it, I immediately pressed buy, and then when the jump happened, it has already come back. Now it is almost like no loss, no gain position. Even at this level, I'm holding calls at no loss, no gain. And what is that I am anticipating? I am anticipating it to go and test this day's high. That's what I am expecting it to do. And when such moves are happening, it will be really good day to pick up things. I'm taking little extra risk today because I had to do it, because these sort of markets are quite frequent, and when you got the average so low, it's better to ride on that and then try to get more profits. Um because it suddenly you see some 15K profit. Natural tendency is to close your positions, right? But I can do that any day. One good trade is what is needed. When you have been playing from the morning and then you have averaged it out and then brought it to such a low average. Uh, when the actual move happens, if the actual move is on the upside and that happens, you can really make some good money, and that can give some buffer for the days like this to come, right? You never know how many days it will move like this. So preparing something for the worst days, saving something little extra on a day like this is important. You can book profits at SG and then take new positions. Uh, sure, I can do that. Uh, I've placed some more orders at 210, trying to go a little aggressive, but if need be, I can book it right now also. When another some 3 4 points, sorry, another some 30 40 points it gains, I can exit at least half the positions. So where is inverse head and shoulder? Santoshi, I don't see any inverse head and shoulder. Can you tell me the time frame? Sorry, timestamp from where I should check? Day basis? I don't see any head and shoulder. So first from here, mm, see all I am seeing is this, Santoshi. This is the peak. Even if I consider this as the left shoulder, nothing is formed yet. Even in 5 minutes time frame, it has not yet formed anything. If I consider from here, still it's not an head and shoulder. 920 candle onwards. See, for us to call something head and shoulder, I'll show you. It has to have like this to, it should be like this. Only then that's called head and shoulder. This pattern doesn't exist anywhere. If I move this also, I wouldn't be finding it anywhere. Um, because it's ended here. The edge should be longer. The edge is shorter. So it's not forming. It's 5 minutes only, Santoshji. 5 minutes time frame only. So unless we see some clear head and shoulder, I will show you some head and shoulder patterns. Maybe that will be. I will go to some 1 hour time frame. I saw one head and shoulder in Bank Nifty. Um, Here you see, this is one head and shoulder. For example, if I have to consider this, this is one shoulder, this is the head. No, no, 1 second, I think I got it wrong. Somewhere I saw the one head and shoulder. Where is it? Over here, over here. See this. This is one head and shoulder. know, things like this. You know, this can be considered as an head and shoulder. This is 1 year time frame. Yeah. So let's okay. We see the breakout has happened, and already it's like flying on the upside. Uh, good, good to see that. So another 30 lots got executed at 210, which I placed. That's great. This is great. Anyway, let's go back in time frame. Yeah, it has to be effortlessly forming, Santoshji. That's the thing. We are no trying hard to see. Then, if we are having difficulty to see that pattern, then it's probably not existing yet, right? So, see, it has not even come to this, and already it went and hit 210. What does it mean? In fact, C is appreciating despite the fall. So these are rarely that you get on the right side. That's why I don't want to. I can comfortably book it, and then I'm already making more than my morning profits, my opening trade, more than that I am making. But I'm not closing it because this is worth to take that extra risk. I think when we did the analysis of finding head and shoulder, the move already happened. I didn't even realize that the trade got executed. Just after that, I saw that it went to 210. I don't know what was the price it went. Let's check. It went exactly to 210. Okay, you have sent me a snapshot. I will check it, Santoshi. Seeing that, you look at head, the head part of it. It's not coming and touching the neckline. You are forcefully drawing it, right? Uh, See, when you draw an head and shoulder, you start from here to here, then you come back here, then let's say it goes even till here. The shoulder is the side, the head has to be higher than the shoulder, right? So let's say this, and then the actual candle stops in the graph that you have sent. It stops here, but you are forcefully bringing it to this level just for it to form head and shoulder, right? That's why it's not correct. And then like this it should form, even if it is an inverse head and shoulder. I mean, just got to draw it downside, that's it. Oh god, I accidentally closed my trade window. One moment. All right, let's refresh and see. So why I am still holding is pretty simple question. Uh, I have explained everything. Additionally, what I have is for you to think. If while it was trading here, I said the call price was at 190, 192. Right now it is trading here, which is significantly lower. How many points? This is 71 and we are at 51. 20 points lower it is trading, but it already went and hit how much? 210. 18 points of gain. So my question is that what would happen if the market reclaims 600 levels? Think about it. Think about the blasts that can happen on the call side, right? Which is why I'm holding on, because if we can get this one right, then probably we don't have to trade for the week. That good returns we can expect. So days like this are very difficult. As a buyer, we are struggling to make one good trade and collect 10 rupees. This is a golden opportunity. Shouldn't be missed. That's the reason I'm holding. And I'm also executing. It's not like entire quantity I'm going to hold for the day. That's not what I meant here. I'm exiting. Say I have about 100 lots. I want to execute, 5 lots at 205, 10 lots at 210, 20 lots at 215. Likewise, incrementally I am executing. Usually, what people do is that 50% they execute at 205 and another 25% they execute at 210. And then some small quantities they will carry for the day, right? But here I am doing opposite. I am exiting very small quantities at 205. 210 I am executing something significantly more. Likewise, I am doing that because at the last moment, if my view goes wrong, let's say it executes till 215. 215, I got sold some 35 lots or something like that, and still I have about 65 lots. And if there is any spike on the downside, I have to lose from my profits. That's okay. But if the wheel goes right and then there is a sharp spike on the upside, it can suddenly jump to 230, 240. Then I would be happy to exit at market. I wouldn't even mind doing that. It's already gradually going up, 207, 208. You should also go back in time and put yourself in the person's shoes who were trading in the morning. People are comfortably trading the same strike at 240, 250, and it averaged and settled at 220 to 27. That range it was holding. Now these guys have purchased their first entry at that. And then when it went up, they further bought more positions at 260. It made a high of 260. There are people who have played all the way up that level. We are holding it from an average of 196, and it is trading at 204. So it's not a big deal. If those guys are going to lose, holding at 230, 240, then we should not be worried about losing some part from the profits, not even from the capital. It's from the profits we are losing something, we should not be worried. Actually, the good part is that this is one good learning for me. I have been tracking one. I used to do this in the past, but today I am extensively doing it. I am tracking both the strikes of calls and puts so closely how the price variations are happening. Some sort of buying ideas we can formulate over here and play, because the inherent bullishness overpowers everything else. It's happening pretty superbly well. So I'll be happy to try it out from tomorrow. So which means mm, opening trades are useless. That's what it means. So there is a dip in the CE premium. I've done some more, buying very small quantities, not very aggressive, just small quantities. And I would be scalping this just to keep the average running. I have a meeting at 2 o'clock, so just letting you know. Today is a very busy day, and I'll be closing the stream in some time. Also, I have to walk my dog and then come back, set up the meeting, and so on. Maybe I'm not saying I'm going to end right away, but if you guys have any questions or anything, please feel free to ask. We don't have to rush this off. Very sensitive uh, place that the market is trading. Uh, Breaking the trend line, coming down, and then reclaiming. So much drama is happening over here. So I want you guys to think through and then ask if there are any questions. I've already shared my views, what I'm anticipating. My view is bullish as long as it tries to reclaim this trend line. Let me extend it further. Just till this I will extend it. Let's see. Our CE premiums holding up. Certainly, it is holding up. That's why I took fresh positions. And in fact, that fresh positions that I took was very small quantities. It has brought my average by another 4 points. So I'm very, very happy about that. Clearly, it is good, holding up superbly well. So executed. Now I brought my average so low that it is at 190. At 190, I have brought my average. Clearly, it's holding up. This seems like erosion. Divya, here is what it is. Which strike are you looking at? Which strike are you looking at? At the money will feel like erosion. ITMs will be like certainly holding up. 44,200. Okay, maybe you are comparing it with the morning price. Very morning, this one was at 260, correct? So definitely not the spikes that you should consider. You should consider what it was trading around, like around 10 o'clock. What was the price it was trading at? In comparison to that, you should relate, because opening spikes will always be there. When there is a large gap up, the premiums will jump like anything, and obviously we cannot match that one. In comparison, any given day, it will look like erosion. But when the market is done with the initial opening moves and then it settles probably around 940, 945, it will be averaging and then slowing down. See, uh, like around this 930, 9, even this probably. Between these times, if you are seeing some sort of Yeah, here is there some consolidation, like three candles over here. Now, what was the price around this? Maybe between 200 and 300 to 320. That was the price. That was the price that you should consider. Morning it would have made 400 also, but in comparison with 400, it will always look like erosion. You can't do anything about that. I am comparing it against 222 to 230. Okay, I'm not considering the peak it made, that is 260 rupees. Mhm. Okay, any other questions, guys? All right, guys, I will end the stream now. Which strike prices are you observing? Jivan, I'm looking at 44,500 call. That's the strike I'm looking at. And on the put side, I was looking at 44,400 put. Both the strikes I was observing. Um, any which ways, I will have to take my dog for a walk and then prepare for the meeting. So I will call it a day, and possibly if there are any time that I get in between, I will update you guys on the insights. Keep checking the Telegram. Um, Otherwise, it's good. I'll end the stream on Trading View now. So thanks a lot, everyone. Yeah, Santoshji, I'm expecting it to claim back. I'm really bullish as of now. It might show all these dances, but then as long as the OI data doesn't change the fact uh, that there is no serious short covering on the put side. Right now, it is showing short covering on the put side, but then if it continues for 2 or 3 more time frame that there is short covering, then it might have hold some value. As of now, it's more like just eroding the premiums of calls and then not reclaiming again. So yeah, thanks a lot, everyone, and I will talk to you guys again tomorrow. Okay, so take care.